Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, May 7th, 2009. Well, it's been an unbelievably wild day on Wall Street, folks. We saw a massive gap up in the markets off the back of good retail sales and some more kind of bullish sentiment on the banks. And then, really, from the opening gap up, we started to roll down, and the market has just really continued to sell for most of the day. We have seen a kind of a midday float up, which is often what you see in light volume, but the market nonetheless is starting to sell again. Notice how this kind of pattern right here is an in spirit of bearish flag pattern. Beautiful bear flag pattern coinciding with my blue trend line. This blue trend line is the same trend line I had on this chart yesterday and the day before in these videos, so you can really follow how accurate these lines are. And that's our goal, guys. We're all about avoiding the Wall Street hype, and how we do that is utilizing all these trend line analysis tools, price, pattern, time, you name it, we do it when it comes to the technicals. Now, again, you can see here the gap up in the markets today, and it was really quite a substantial gap up. Believe it or not, you saw the financials leading. Bank of America was up at $15. Goldman Sachs was up a few dollars today as well. And here, I'll show you Bank of America's chart. Here it is, gapping up to the $15 level, and ever since then, it's kind of just floated all the way back down, just up a dollar on the day. Goldman Sachs. Check out this chart on Goldman. Ugly chart on Goldman as it sold all the way down. Now, this is the first decent amount of selling we've seen in the markets in reality in quite some time, especially from the banking sector. It's been a long time since we've seen this, weeks probably. Now, the real key about this is, does it reverse at some point today? Remember, we have the stress test results coming out later today. You also have the conference calls, Goldman Sachs, JP Morgan conference calls tonight after the stress test results are leaked. I'm sure they're going to try to put a very positive spin on everything in those conference calls. So the question in my mind is, do we see a bounce into the close off of that, or do we just continue to sell? Needless to say, as we talked about in multiple days here, the markets remain very near-term overbought. It's just a matter of them being able to hold the markets up on light volume. Well, today the volume has been actually pretty heavy. I'm going to go back to the Spider intraday 10-minute chart, and you can see, look at the volume here. Even here, you can see a nice pop in volume on the sell-off. There's been a lot more volume in this market than the last couple weeks, and you can clearly see that on the daily. I'm going to flip to the daily. Look at this volume. Here's your volume average probably over the last 2 to 3 weeks. This is what it was before, all the way up here. So there's been a big difference in volume, and that has to be a little bit of a caution flag. We've discussed that in our premium videos at night as well to our premium subscribers. Now, again, you have your gap up, then the hard sell. And again, this yellow line I want to show you. I think I showed this to you yesterday as well. You can see this beautiful yellow line here going all the way back to where it began on the 30th of April right here. If you take that high and you connect it to the high on the 4th and the 5th right here, and then trail it all the way up to the 6th, right here, 7th, and then again, you gapped above it today on that yellow line. Look at that one candle pause, then you broke through it. Where did you go? 20 moving average, you paused, pulled back right into a necktie of the blue trend line and the 50 moving average. That yielded a beautiful bounce in this market. Very nice bounce, takes you up to the 20 moving average. And again, you should all know this pattern, all right? This is what we preach to our premium subscribers, is to understand pattern, price, and time, because it will tell you and give you a heads up on which angle or which move is the next one coming. And that's what it's all about, getting tomorrow's newspaper today so you can be ahead of the curve. You can be kind of on the side of the institutional money in understanding where the market's going to go, so you can actually profit instead of, having to take losses and so forth. So again, you can see the in spirit of bear flag sells off here beautifully. We come and hit the blue trend line again. This time we break it. Now after that, we come back up and you kind of trade sideways. And this next pattern is a very nice long elongated pattern where you can see in spirit of bear flag. We just broke down to a double bottom. You can put that right in here so you can see your double bottom as support. So you have minor support here. If this breaks, you have a pink trend line right down here that's going to be more support. All right, a lot of these lines are the same ones that have been on for days and days for you guys, so you can really follow them and see how accurate this kind of stuff is and how important it is to really educate yourself and learn how. And again, our research center really promotes the educational side while giving positive guidance on the markets and really teaching how we come to our conclusions on our guidance as well. So I do encourage you to join that at InTheMoneyStocks.com, the research center. All right, so again, you're seeing the market downtick here to double bottom levels. All right, that is support, and again, support right here at about 91.20 on the spiders. If that does decide to break, you're going to break to this pink line right down here at around $90.90 will be next support. And then after that, ultimately, you could fall all the way down. You'll have a little bit of support right here. See this pivot right down here for gap fill? I should draw that one in. That's going to be a very key level to watch. So that would be your next line to watch if the pink line gets broken, and that's at about $90.60. If that breaks, then you actually could come all the way down to this secondary yellow line, which is around $89.90 to $90 on the SPY. Those are your levels to watch, but right now you are hitting a little bit of minor support at the double bottom from earlier today. Just notice here, guys, see how the blue line has been so instrumental over the last few days in this market. The blue line, again, you rallied up off of the breakdown here. You actually closed above it, but notice how you had a reversal candle. You never confirmed the break above, and that's something else that's very important for those of you to understand. Understand what confirmation is. How do you not get fooled when a candle closes above? How do you know if it confirms? What do you exactly need in that situation? And again, you can see a pullback, and then again, it does it here, but you don't confirm it again. It goes right to the 20, and then the sell-off begins. So believe it or not, a lot of amateurs would get faked out here on this close above. Both of them there in that situation are going long. The amateurs are going long there when the pros are actually saying, you know what, probably we're going to roll over here because the overall pattern is a bearish pattern. And you can see that rollover happening right now as we are right into the support line. In fact, we're breaking a little bit lower. Maybe we'll see this pink line down here. And again, that's just a little, right around that 90, 91 level, 90, 90 on the SPY should be good support in this range. Okay? So again, very, very interesting market today. A solid reversal. The question in my mind remains, do we see it last all day? Is the volume going to continue to be decently strong today, which could indicate, again, some sellers coming out of the woodworks, taking profits? And again, something we'll go over in the nightly video tonight for all our premium subscribers will be, where does this set us up for the next couple days? If we get a down day today, if we get an up day today, where does it set us up going forward? Because that's really what we want to know, right? We want to know, how do I position myself for the next day, the next week, the next month? And that's what we will go over and continue to go over in our nightly videos, okay? So you can get them again by joining the Research Center. Also, just a reminder, folks, we have a webinar this Saturday which goes over all our methodology. And again, in the Research Center, we kind of go over the methodology a little bit and teach, but in the webinar, we really go into the nitty-gritty about how to really calculate targets, cycles, understanding, key numbers, key everything. And that's really if you really want to get in depth, that's really what you're going to want to do. And you can find that on our website as well. All right, folks, that's all for now. Just keep in mind, you're still hugging this minor support line of double bottom right here. Again, until we close below and confirm it, you haven't broken it. And again, you can see it's starting to uptick a little bit. If we do happen to break down, you will have support just a little bit below. On the resistance side, blue line would still be good resistance at this point. If we come up and tag that or the 20 moving average right here, that would be good resistance on the upside. All right, have a wonderful day, folks. We hope to have you with us in our premium services. Take care.